Navigating Inflation in 2023, Unraveling Causes, Impact, and Strategies. As the calendar turns to 2023, the global economic landscape continues to be shaped by a significant and pressing concern: inflation. This article aims to dissect the nuances of inflation in the present year, exploring its underlying causes, the impact it's having on individuals and economies, and the strategies being employed to mitigate its effects. Inflation in context. Inflation, in its essence, refers to the persistent increase in the general price level of goods and services within an economy. While moderate inflation is often seen as a sign of a healthy economy, the spikes witnessed in recent times have raised eyebrows and prompted analysis. Causes of inflation in 2023. Several factors have converged to contribute to the inflationary pressures observed in 2023. 1. Supply chain disruptions. The ongoing disruptions caused by the COVID-19 pandemic have rippled through global supply chains, causing shortages of crucial materials and components. These disruptions have driven up production costs, which, in turn, have been passed on to consumers through higher prices. 2. Labor market dynamics. Labor shortages in various sectors have led to wage increases as companies compete to attract workers. These higher wages are then often passed on to consumers, further fueling inflation. 3. Energy prices. The volatility in global energy markets, driven by factors such as geopolitical tensions and shifts towards renewable energy sources, has led to fluctuating energy prices. These fluctuations can impact transportation and production costs, eventually impacting consumer prices. 4. Pent-up demand. As economies recover from the pandemic-induced slowdowns, consumers are unleashing pent-up demand for goods and services. This surge in demand can outpace supply in certain sectors, leading to higher prices. Impact on individuals and economies. The inflationary pressures of 2023 are having a tangible impact on both individuals and economies. 1. Cost of living. The most direct impact is felt by consumers who are facing higher prices for everyday goods and services, from groceries to housing costs. This erodes purchasing power and can lead to a reduced standard of living. 2. Central bank response. Central banks are navigating a delicate balancing act. While some are considering tightening monetary policy to curb inflation, there's a concern that raising interest rates too swiftly could stifle economic growth. 3. Investment and savings. Investors must adjust their portfolios to account for inflation. Traditional safe havens like bonds might offer diminished returns in real terms. Similarly, those with savings might find their value eroded unless they're invested to hedge against inflation. For wage price spiral, there's a risk of a wage price spiral, wherein workers demand higher wages to keep up with rising living costs. If businesses accede to these demands, it can create a feedback loop of rising wages and prices. Conclusion. Inflation remains a significant concern as 2023 unfolds, reminding us of the intricate dance between economic forces and individual livelihoods. As governments, central banks, and individuals grapple with its effects, a balanced and informed approach becomes crucial to steer economies toward stability while safeguarding the well-being of citizens in an inflationary era.